Let's start with the fundamental points you need to know. The Fibonacci retracement tool cannot be used by itself for chart analysis or for opening trades. It is an auxiliary tool that can assist in analyzing the chart. Many traders open positions and even place stops based on fib levels. This is an incorrect approach that will not yield the expected results over the long term. Discount and premium zones exist. To identify them, you simply need to draw a Fibonacci grid on the impulse and pay attention to the 0.5 level. This is the fair price, and everything below the 0.5 level is considered the discount zone. Here, we are interested in the price behavior to look for a long setup. Correspondingly, the zone above 0.5 is the premium zone, where you can consider opening short positions. It is important to account for the structure. If the chart shows an uptrend, then you draw the grid from the low to the high, from where the correction began. In this case, we expect the price to reach the discount zone, where it is most likely to reverse and continue its upward movement. If you see a downtrend, then you need to draw the grid from the high to the low. We expect the price to be above the 0.5 level, that is, in the premium zone, and there we will consider opening short positions. Now we will talk about the Fibonacci extension tool, but it is not at all mandatory to use. If you know how to analyze charts, it is sufficient to understand where the discount and premium zones will be. Let's take this example as a basis. The price is moving in a bullish trend. Impulses form higher highs, and corrections form higher lows. Each time, the price returned to the discount zone before the next impulsive move, where one could find a setup and open a long position. If we were talking about a downtrend, it would look the same, only in the opposite direction. Now, let's look at the Fibonacci extension tool. The reasoning here is slightly different compared to the standard grid. The levels 0.618, 0.705, and 0.79 are considered the OTE zone, the optimal trade entry. Many traders, especially those who trade classical technical analysis, consider these levels to be support or resistance zones. This is a significant mistake that will slow down your development as a trader, as you simply will not understand why the price reversed at a specific level. One day it works, and you won't even think about it, but the next day you will get stopped out and won't understand why it happened. Trade entry should always be based on the chart itself. You need to see a confluence of factors to open a position, not just any single line. Therefore, the OTE zone is merely an area where a position could be opened. Often, this is precisely where a significant support or resistance zone will be located. Typically, you will see an order block with an imbalance, which the price will test and reverse from. If we consider the current chart, you can notice that asset distribution was occurring here. Recall Wyckoff. Here we see manipulation at the highs, also decreasing volume with each new high, and after the formation of a UTAD, upthrust after distribution, a structure break. This confirms the distribution. After that, we draw the Fibonacci retracement from the high, where the downtrend began to form, to the low that broke the bullish structure. Now, in this area where the levels are displayed, a significant resistance zone can be found, from which the price is most likely to reverse and continue the downward structure. That is, we are now determining the correction potential. Between the 0.618 and 0.705 levels, we see inefficient pricing, which acts as a magnet for the price. The primary goal of this correction is to fill the imbalance and test the resistance zone. If we switch to the 4-hour time frame, a breaker will be present in the OTE zone, acting as resistance within this range. Now, observe what this correction looked like, and what you need to pay attention to in order to find an entry point for opening a short position. The price begins to move confidently upward with full-bodied candles, which would be a negative factor for opening a position with an aggressive stop loss placed beyond the breaker. Usually, in such situations, I wait for a setup to form in the resistance area and want to see manipulation at the highs, distribution according to Wyckoff, and then confirmation in the form of a structure break before I even begin to look for an entry point. I am never in a rush to make a decision about entering a trade. I would rather wait and enter an obvious situation where there is a setup I have already traded hundreds of times. Another significant downside of an aggressive entry without confirmation is that the price often trades near the resistance zone for an extended period before finally reversing. I have no interest in sitting through that in a position. I always try to enter just before the main move. Haste leads nowhere good. The desire to make money immediately is understandable, but based on experience, all money earned randomly is not preserved. Trading is less about how much you have made and more about how much you have been able to keep. Perhaps some of you do not understand these words due to a lack of experience, but in time, everything will fall into place and you will agree with me. So, the price is currently in the OTE zone and has tested the breaker. At this stage, a consolidation range typically forms, and it doesn't matter which time frame you are looking at. It is extremely rare for the price to simply test an area and then immediately reverse. One of the most frequent reversal variations I can highlight is this. The price tests the resistance zone, begins to move down aggressively, and then we return to the resistance zone again and get another false high. The true reversal will occur here. Furthermore, if the price impulsively breaks this low, a breaker will be formed here, and from it, one can consider the further price development. Let's observe what happens next. After testing the breaker, the price moved downward the following day and then updated the local high. After this, an aggressive downward movement began. A bullish order block is located here, from which the price could potentially reverse, as we still maintain a local bullish structure, along with the unmet imbalance above that we noted at the very beginning. Therefore, to open a swing position, one should consider a test of the 0.705 level. After testing the bullish order block, we see a return to the zone and manipulation at the highs, and we can also notice the price filling the daily imbalance. Substantial liquidity pools are forming below. This is where a large player is accumulating short positions with the aim of further evaluating the asset. Therefore, you should wait for a structure break and then perform the same actions. Switch to the 4-hour time frame and identify the swing low from which a higher high was formed. This will be the structure break. The price consolidated below it, and the correction begins from this low. Therefore, draw a Fibonacci grid to determine the correction potential from the swing high to the swing low. Now switch to lower time frames to identify the resistance zone from which the price could reverse. On the 15-minute time frame, this full-bodied candle is a bearish order block located within the OTE zone. Accordingly, we can also wait for a setup to form in this area and open a position. Alternatively, you can wait for a downward structure to form and do the same. A downtrend began forming here. The breach of this low will be considered a break of the upward structure. I know many of you will think this low is the key one, but you are mistaken. I will try to create a comprehensive video about market structure within the next month, covering all the nuances. A little patience, and you will have no questions left. In the meantime, you can review the video I already made about structure. It covers the fundamental concepts everyone should know. But here is an important nuance. We already have a confirmed downward structure at this stage. It started developing even before the true structure break. This is what it will look like. This high will act as a liquidity pool, and here we have a similar situation to the one we started with on the daily chart. There is an unfilled imbalance and an untested order block that initiated the downward impulse which broke the structure. Therefore, we draw the Fibonacci grid from the high to the low. We see that the 0.705 level again coincides with the filling of the imbalance and the test of the order block. Therefore, this will be an excellent area to enter a position. You can place a limit order, or you can wait for a test of this zone and find a setup on lower time frames to enter the position. The target will be the breach of the previous lower low on higher time frames. The stop loss is placed beyond the order block. If the price triggers the stop, the setup becomes invalid. Now, observe the price action. The price cleanly tested the resistance area in the OTE zone, and the downtrend continued. Looking at the 4-hour time frame, we see an excellent trade execution with a very favorable risk-to-reward ratio. All we did was repeat the same process, each time moving to lower time frames. This example demonstrates that the market is fractal, and regardless of the time frame, the principles work identically. Now, let's examine the current situation. This is an example of a correction within a bullish impulse. On the weekly time frame, the price is still within a downtrend. This is the structure break we noted in the previous example. A lower low was formed here, followed by a lower high, and then another lower low here. Where did the correction begin? We identify the resistance zone here, which corresponds to filling the weekly imbalance and a breaker on the daily chart. A Fibonacci grid is also drawn here. The OTE zone and the 0.79 level will be here. This is the anticipated reversal area. But let's imagine the price hasn't yet reached this zone. Consider the uptrend occurring within the correction of the larger weekly downtrend. Here, I am marking the obvious swing highs and lows and drawing Fibonacci retracement levels on each impulse. This is all about possibilities. Here, you could have opened positions using a straightforward method, even if you only understand market structure. Before each impulse move, the price moved into the OTE zone. It becomes much clearer on the 4-hour time frame. Here we see an impulse move followed by a corrective movement into the OTE zone. An order block is located here, from which the price reversed. The same pattern repeats here. An impulse, followed by a corrective move towards the order block. The next example shows the same thing. Only a breaker on lower time frames was triggered. Now, let's examine this specific situation. We will perform the same analysis as in the previous examples. First, we determine the current structure on the daily chart, as the weekly time frame is already in a downtrend. A structure break occurred here, after which the price began forming higher highs and higher lows. This is a higher high, this a higher low, and here another higher high. This slow upward movement constitutes the structure on the 4-hour chart. On the daily chart, these are merely liquidity pools and are not considered structural elements. Let's assume we expect to see one more higher high before a reversal, so we determine the potential for a corrective move. We draw the Fibonacci grid from the higher low to the higher high. These are the obvious swing points we are interested in. Here, the price has already moved beyond the OTE zone. This happens sometimes. The support zone in the form of a breaker at this high was broken. The next area of interest is this order block. It will still be within the discount zone. That is the main point. Accordingly, from the identified order block, we can consider long positions if a setup forms. I expect the removal of all liquidity below and the formation of a setup before an upward impulse. The minimum target will be this swing high. This will require observing how price behaves in specific zones. At this stage, you should at least have a basic understanding of the essence of applying the Fibonacci retracement tool. As you already know, the lines themselves carry no inherent weight. The primary condition for the successful application of this tool is the ability to correctly determine the market structure. If you simply rely on them as support and resistance areas, like the majority of traders, then you, like that majority, will be unprofitable over the long term. I never speak about making money immediately because it is not a reliable indicator. You can analyze the fruits of your trading over a period of 2 quarters. These data will clearly and distinctly display your actual results. Now we will discuss determining the potential of the impulse after the corrective movement. On the screen, you see negative values: 0.27, 0.62, 0.1, and 0.2. They are what we need for setting targets. Each negative value can be used for partial profit taking, regardless of the price direction. That is, you first determine the potential of the corrective movement, and then you have the opportunity to determine the potential of the upward or downward impulse. But in any case, these are just lines that can show optimal points for taking profit. I recommend focusing primarily on the chart itself, where you can already determine where to place take profit orders. I like to use these values when there is nothing on the left side, meaning the price is at the highest highs or lowest lows. But I am sure that for some, these values will be very useful. Also remember that Fibonacci retracement is not a standalone tool and cannot be used as the sole factor for entering a trade. And the most obvious thing, trade according to structure. When drawing the fib grid, there is no need to complicate anything. The more obvious the situation, the higher the probability it will play out.